But now the stock that's making waves is the one on our radar. Subash Menon, the CEO and Managing Director of Subex, joins us. Subash, thanks much. Can you give us some details on the deal of selling the activation business? What's the kind of money you are making first up?
Well, that is not public information at this point in time. I mean, both the parties involved, us and Netcracker, which is part of the NEZ Group, have decided not to share that information right now. But I can give you the other details of the transaction. This is basically our activation business, which we acquired from Synthesis in 2007. That is being sold now, and that means that what we have been talking about as fulfillment and assurance solutions, the business that we used to talk about, apart from business optimization, will move out of our portfolio. This transaction is expected to close by the end of this month, hopefully by 29th or 30th of September. And we entered into a purchase agreement a few hours ago.
Okay, Subash, can you then tell us what was the share of your revenues that was coming from this business that is now moving out?
Yeah, almost 20% in the last financial year came from this business. But what is more pertinent is whether this was profitable or not. Actually, what has been happening over these past few years is that this particular business, which we acquired from Synthesis, has been incurring losses in most of the financial years over the past few years. And in the last financial year, it was just about break even at that point in time. So what is going to have an impact on this moving out will have a significant impact on the bottom line of the business, of the products business. So if you were to look at the products business EBITDA last year, you would see it was 33%. Okay. If this business was not there at that point in time for that whole of that year, EBITDA would have been like 39% plus. So that's the difference. That's the impact that this is going to have. This moving away will show people will be able to see the real EBITDA of the core business coming to the fore.
So this 39% of your core EBITDA, which you're referring to, is sustainable from here on. Is that something that we can expect from Subex?
Yes, that is the expectation, absolutely.
Okay, and the other thing is with reference to your FCCBs, because that is due in March of next year. Will you be, using the cash that you get from this deal to repay that?
Yeah, we will use this for that purpose as well, no doubt about it. But we do have other, bank debt and stuff like that now. So it all depends upon what we could use to reduce the bank debt at this point in time, and take it again and repay FCCBs at that point in time. So those are all options. Money is fungible. So yes, whatever money we get, whatever cash that comes in, will go towards debt reduction. No doubt about it.
Okay, Subash, it's a little tough for your investors to analyze your stock till some more data is available on this transaction itself, whether there will be another income component at the end of this quarter or at the end of the next quarter. You bought the Synthesis acquisition in 2007 for $165 million?
That's correct.
Okay, are you selling it at a loss? Can you give us some idea as to what is the kind of transaction?
Over the past few years, what we have done is we have restructured that particular thing through that valuation through the goodwill and stuff like that through our balance sheet, with the result that the value of this particular transaction in our books is extremely low. Okay. So we do not expect any loss in the P&L because of this transaction, nor do we expect a serious gain there. Okay. So it could potentially be a wash. I mean, a neutral kind of transaction from a P&L perspective.
All right, that's helpful. Well, now for the rest of the business that's with you, how are things looking in the light of, say, the global the slowdown in the US and the problems in Europe? Would you say that the kind of growth you saw for the balance 80% of your business would be on the lines it was in FY11, or could volumes grow a little more slowly?
We think that we could actually grow faster than FY11 and FY12. We should grow at about 20% plus in FY12. That's slightly higher than the FY11 growth. You need to understand one aspect about our business. It's extremely well distributed among different geographies. So if you look at Western Europe per se, what's the share of our revenue from Western Europe is a pertinent question, and that's probably about like 10%. So if you look at United States of America, like in North America, which is primarily largely that, specifically, you would probably see about 12 or 13%. That's it.
Subash, we missed that Western European number. We just lost 10%. Your voice.
10%,
Okay.
excluding our large contract with British Telecom. It's 10%. So if you look at, so let's say the rest of Western Europe, not counting BT, that's 10%. And US is like 12 to 13%. So there is no geography which has a significant contribution to our revenue. So it's very evenly spread. So this helps us when a particular geography goes down, because then the impact on us is not as high as it would be on Indian services companies who have much larger percentages of shares percentage of revenue coming from these geographies.
Mr. Menon, since we have you with us, any plans to restructure the FCCBs, because the conversion rate at 80 rupees is still significantly higher than the current market price of Subex. Is that something that we could expect, or are you planning to just repay it off now that you have the money?
FCCB 1, we are looking at repaying in March 2012.
Okay.
FCCB 2, we are looking at rolling over come March 2012. As regards the terms of that, we have shared some, we have thrown some light in the past, but naturally at this point in time, I can't be sharing all of that because we are still, awaiting RBI approval and that kind of process we are going through, so I can't be sharing that now, sorry.
Fair point, Subash Menon. Thank you very much for joining us with all those details. So that's a bunch of details that we have from Subash Menon to work on. That transaction is going to definitely improve the EBITDA. That's the positive for investors, which is why we see the stock excited. It will be a little bit of cash. It's certainly not going to be a loss, but it is not going to be an extraordinary income that will come to the company either. That much Subash could tell us. Also, he's expecting fairly decent growth in volumes for the balance part of Subex. Subex stock excited, up 5% after those details from the company. We'll take a break. We'll come back and discuss once again a theme that has been with us for some time now, Reserve Bank of India's latest rate hike, its impact on real estate companies. Venkat Narayana, the CFO of Prestige Estates, joins us.